Well, as you told you earlier, the stock market has recently experienced some all-time highs. But halfway through 2016, that doesn't tell the whole story. In this morning's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Courier publisher Jamie Smith in the studio to talk about where things stand at the end of the second quarter and what the rest of the year might bring. Gentlemen.
Thanks, Peg. Mike, thanks for being here as usual.
Good morning.
All right, so she said we're at record levels now,
right.
But it doesn't look like it's been an easy road to get to those levels.
No, it was certainly not an easy road. The first half of the year showed us a little bit of everything, really. We started off lousy. January, February were not good months. We bounced back in March, so the first quarter actually ended okay. Not great, but could have been worse. April, May, a little bit easier, and then as we headed into June, we thought, well, we're going to close out the second quarter on a high note, but then all of a sudden at the end of the month we had Brexit, and the Dow lost 1,000 points in 2 days, and we thought, well, the second quarter's been wiped out, only to see it race back just before month end and to actually finally finish the quarter on a high note. So yeah, it's been a wild ride, no doubt. We saw the Dow as low as 15.5 and as high as 18,000. Wow. So really all over the map. But here's the kicker. You know, we talked a couple weeks ago about this concept of the average annual return for the market, that a typical year will have a stock market return of in the neighborhood of 8%. Well, through the first 6 months of the year, the S&P is up 3.8%. So despite all of that volatility, we're actually right on track
where you thought
for a typical year. Yeah.
All right, I always ask you to bring your crystal ball. You never bring it.
No.
But what's on the horizon for the second half of the year?
Wow. You know, we could spend all morning really listing the things that we should be keeping an eye on for the second half. First and foremost are the corporate earnings for the second quarter, which are just now starting to come out. We'll see those over the next few weeks. Very important numbers for the market. The first quarter numbers were not very inspiring, so there's a lot of interest in these numbers to see if the second quarter was a bounce back. But then after we get past that, you know, the Fed, and more on Brexit, and China, and on, and on. And of course, the election is coming up too. So there's going to be no shortage of issues that will be hovering over the market in the second half.
Yeah, well, we just interviewed one of our reporters on the election, and you and I on this very program a few weeks ago talked about how the election can play a big role in this.
Absolutely.
What are you seeing?
Absolutely. Well, we can look to history for some guide. And in the past, election years, presidential election years, have tended to be pretty decent years for the market. And even better, they tend to be backloaded. That is, they finish
toward the end of the year,
very strong. Right. That said, they also tend to be more volatile years. So we've certainly seen that so far. But the markets tend to get, as we get nearer to the election, even more volatile. Probably a lot of that has to do with uncertainty, who's going to win. You know, as we all are aware, the market just does not do well with uncertainty. So as you get nearer the election, things get a little choppy. But then again, historically, once you're past the election, you end on that high note. So we could be setting up for a strong finish to the year. But even if that is the case, we're probably going to face a little more volatility before we get there.
I'll be anxious to see, because as Chris pointed out in his interview, you know, our candidates this year are the most likely, you know, who they're going to pick, are very different. So,
absolutely.
You know, so the change is there. So, well, listen, we will continue to ask that question, and one of these days we're going to have a crystal ball here for you to read, right?
I'll remember it one of these days.
All right, thanks, Mike.